Hi, thanks for joining Affinity's Market Update. This week I'm joined by Dan Boosey of Affinity Mortgages, who's going to give us his rundown on what is happening with rates. Hi Dan.
Hello Jamie.
How you doing?
Very well, thank you. How are you?
Good, yes, very well.
Good.
So thanks for joining us. Obviously, just along the lines of moving into this series and talking about what things are happening in the market for not only our clients but us as well.
Yeah.
And probably sensible to talk about mortgage rates, right? Because there's a lot of people talking about it right now.
It's quite a hot topic.
Yeah, it certainly is. So going up, going down, what are you seeing?
Obviously, start comparing that to the start of the year, they've gone up drastically. That's just the factor of where we're at the moment. We can't really say if they're going to go up, if they're going to go down, because it's just anybody's guess at the moment. It's just so up and down. So I think what we do know is that where the rates are at the moment, and I think the best thing that a client can do if their remortgage is due anytime soon is speaking to us, because we can have a look at the best options for them earlier.
We've got somebody who might be watching this who might be worrying about where the mortgage payments are going to go. What's the ideal thing for our clients in terms of how long ahead of the game do they need to be? What are we really looking? What are the questions that we're going to ask? I know we've talked about this internally, but it's good for people to know as well.
Yeah, so obviously those questions, well, obviously the worst thing to do is bury your head in the sand and just sort of ignore it, because if you're hoping that things are going to get better in the next few months, we just can't see that happening. So the best thing to do is just to speak to us. Obviously, we know what's happening on a day-to-day basis more than most people, so that's where it's best to speak to your broker or even just speak to us. Obviously, we're fee-free, so we will look at that from the start, from the get-go, and obviously there's no cost for that service. And what we're having to do is maybe have those more difficult questions, difficult conversations, where previously it was, what interest rate do you want of 1 point something, and here you go, here's that mortgage. It's now a case of, right, okay, your mortgage interest rates are going up. We're going to have to break that down, because obviously there's the interest only element that we can look down, there's extending the term that we can look at, but ultimately we have a duty of care to look at the client's own expenditure. Sure. I think obviously we were saying, yes, the lender still has to abide by responsible lending, but at the same time the client has to responsibly spend in their, and obviously if they've got the Skies, they've got the Netflix, they've got all the subscriptions and the gym memberships, it's a reality of what's the priority.
I think the fact, as you said earlier, it's great for clients where we know that we've already spoken to those clients and they're in our systems, and we know that 12 months before the end of their mortgage we're going to get in touch, and then we're going to speak to them again at another point, and then we're going to speak to them again until we get to that successful point of completion. So this is about a new customer who's maybe spoken to another mortgage broker or dealt with their bank directly in the past. What would you say what's the benefit of speaking to you today?
Yeah, I think it's just understanding. I think that's funnily enough, I've had that exact same conversation with someone over the weekend, whereby they've spoken to a mortgage broker already. They don't really understand the options that they are being given, the types of rates, what they can do. So I think us looking at it and explaining it as simple as possible, to make sure they understand what they're committing to, because it's their day-to-day life that this is going to be affecting. Obviously, it's the roof over their head. So I think us explaining it so they understand it is the most important thing, and their objections as well, put them to us, because we can sort of try and make a situation whereby that caters for everything in terms of the rate increasing, and also, that's ultimately what it is. It's the rates increasing, the monthly payments increasing. So we need to see how we can help that, whether it be the rate type, the repayment type, or the term. There's a lot of things, all three of them we can factor in to make it better.
And I think that is important, isn't it, for us to get involved in those conversations as early as possible. I know you mentioned 7 months and 12 months. For us, I guess what we really want to do is get those conversations being had. I think for maybe a self-employed person, you may be talking sort of at least 12 months ahead of time, so that we're really well set. And for an employed applicant, I know we've talked internally, and we really want to get those conversations had a good 7 or 8 months before that's coming round, to try and take the pressure off and to try and affect some change if we need to.